Siki was fortunate to host him, and the chamber recommended maintenance of low interest rates and always fostered benefits for the trading sector and the MSME sector. Sri C.D. Deshmukh in 1944, the first Indian governor of Reserve Bank of India, also visited Siki, during which the chamber raised several important issues relating to currency reserves and the need for effective utilization of sterling assets to meet increasing expenditure. This tradition of engagement has continued into the modern era. Siki had the privilege of interacting with several distinguished governors, including Dr. Manmohan Singh, Dr. Rangarajan, Dr. Raghuram Rajan, and Sri Shaktikanta Das. Even as recently as last week, Siki hosted a team from Reserve Bank of India and facilitated a session on ease of doing business. Siki is fortunate to complete 115 years of service to industry and to the nation. Formed under the inspiration of Mahatma Gandhi, we continue to serve as a platform to bridge the interest of all stakeholders. We have more than 25 effective committees spreading across various sectors, and we recently hosted the Chennai Economic Summit in association with the Tamil Nadu State Planning Commission and the World Tamil Diaspora Conclave, and we continue to serve the interest of the industry and also balance it with the regulator. I thank you all for being with us today, and we look forward to your continued support in the days to come. Thank you.
Thank you, Shiv Shankar. This is also a moment to recognize our dignitaries. May I request Mrs. Geeta Gangadharan to offer a bouquet to our chief guest and the memorial speaker, Mr. Swaminathan. Ms. Sweta Krishna will recognize the chairman of the Madras School of Economics, Dr. Rangarajan. Mr. Ganesh Antakrishnan will recognize Dr. Banamurthy. We are privileged to have Mrs. Swaminathan as well. I request Sharda Ganpati to recognize Mrs. Swaminathan. In the past, we've had several colleagues of my father pay tribute to him on this occasion, but then we are moving over to the next generation. So please be seated. We had one of his grandsons pay tribute, which was even mentioned in the press as a departure from convention. But this time, we're sticking to that breaking from the convention. Some in the family knew him, some in the family know of him, and we are coming down to the generation of people who know of him. May I invite his great-granddaughter, Tulika Krishna, all of 16, to pay tribute to her great-grandfather.
A very good morning to our respected chief guests, dignitaries on and off the dais, guests, and my dear family. I am Tulika Krishna, and it is truly a privilege to be representing my family on the occasion of the 12th annual memorial lecture of G. Ramachandran. G. Ramachandran was known for his dedication to his work, his humility, his compassion, and his deep love for his hometown of Vallam. To me, however, he was all of these and more. He was my Periya Tata. Though he was a man of very few words, he taught me more about life through the actions than words ever could. Every morning at 7:30, as I sat on the patio before school, I would see him go for his walk without fail. A quiet yet powerful reminder that discipline, routine, and staying physically active matter at every stage of life, even at 85. During our weekly catch-ups, as I dipped my biscuit in his evening tea, Tata listened to my made-up stories with patience, never brushing them aside as childish. In doing so, he taught me to value imagination, to believe that the ideas which seem improbable, even impossible, have the power to change the world. My time with him may have been brief, but his presence in my life only grew stronger through the stories my family lovingly shared. From studying in a small Tamil medium school in the village to becoming an IAS officer and serving as finance secretary of our country, his journey was nothing short of extraordinary. He was part of landmark moments like bank nationalization, helped lay the foundation of the Children's Hospital in Egmore, and worked alongside several prime ministers, all made possible by his hard work, integrity, and determination. Through this, he showed me that real and lasting changes in our world is always possible. Listening to these stories, I often found myself thinking, "Enakku periya tata madri aganum. I want to be like my great-grandfather." Today, as I begin my journey at university, pursuing economics, I hope to carry forward his legacy by living the values and principles he stood for. I can only hope that wherever he is smiling and proud. Thank you all for being here today and for continuing to honor and celebrate his life and legacy.
I've got it right now. Thank you, Tulika. There are many here who know Mr. Swaminathan personally, but I know him because of my classmate Pradeep Kumar, who used to be Managing Director of State Bank. Generous as he is, only yesterday he donated a bus to our old school. And when somebody asked him, "How long do you want to live?" he said, "When the school reaches 200 years. So I told him, "I want to live as long as you reach 100. Pradeep, thank you very much for helping us out and the family. Another set of people who know are ex-state bankers, and it's led by Mr. Murli Krishna, who has worked with you in the past. He would like to recognize you with a bouquet. After which, I would invite another grandson of Mr. Ramchandran Chella-Krishna, a leading chartered accountant in Chennai, to introduce Mr. Swaminathan. There are other admirers as well, sir, so you'll have to stay standing for another minute.
All of this here, I can take a picture.
Yeah, I think post. I think Vinod try and arrange a picture of all state bankers after the event here. Yeah. May I now invite Chella-Krishna for introducing our memorial speaker.
Morning, everyone, distinguished guests, ladies and gentlemen. It is a privilege to stand before you this morning to introduce a speaker whose professional journey mirrors in many ways the evolution of the Indian financial system over the past 4 decades. The GR Memorial Lecture is not merely a platform for ideas. It is a space that honors depth, reflection, and more importantly, institutional thinking. It is therefore particularly fitting that we have with us someone today who represents all three in equal measure. Mr. Swaminathan Janakiraman currently serves as the Deputy Governor of the Reserve Bank of India, where he oversees the Department of Supervision in areas central to the stability and integrity of India's financial system. His responsibilities extend across supervision of banks, NBFCs, and institutions, ensuring that a system of enormous scale continues to function with resilience, discipline, and trust. But the significance of this role becomes even more striking when we look at the journey that led him here. Mr. Swaminathan's early years were shaped in Kumbakonam, a town known for its intellectual tradition and the quiet pursuit of excellence. Incidentally, it is a place where Mr. G. Ramachandran also did his schooling. He later went on to study commerce at the Government College for Men, affiliated with the University of Madras, laying an academic foundation for what would be a lifelong engagement with banking. He also completed the CAIIB and entered the State Bank, beginning what would then become a 34-year career with extraordinary breadth and depth. Over the decades, he moved across a wide spectrum of roles, beginning with branch banking, retail banking and operations, international banking and trade finance, risk management and financial oversight, and culminated with digital banking initiatives at a time when Indian banking itself was going through structural transformations. As the Chief Digital Officer at SBI, he contributed to strengthening transaction banking and the digital platforms during a period of rapid technological change. In digital operations, he served as the head of the digital banking division, overseeing several transaction banking segments as part of SBI's transformation efforts. He played a major role in the enhancing of transaction platforms and amidst India's rising adoption of the UPI proliferation movement. His elevation as Deputy Managing Director and later Managing Director of SBI marked a shift into institutional leadership. As a Managing Director for corporate banking and subsidiaries, he oversaw large credit portfolios and a diverse ecosystem of subsidiaries, navigating challenges in governance, capital allocation, and post-pandemic recovery. Mr. Swaminathan's tenure as Managing Director until his departure in June 23 focused on strengthening subsidiary governance, corporate lending standards, and including global markets and treasury functions. Transitioning on to the Reserve Bank as Deputy Governor in June 2023, after a 34-year career in SBI, he leads the Department of Supervision, overseeing large financial institutions. His role combines off-site monitoring of asset quality, liquidity, and capital adequacy. He has emphasized a risk-based, data-driven supervisory approach, building analytics and early warning signals to address the emerging threats like cyber risks and climate exposures. He also supports the Board for Financial Supervision in their regulatory actions and manages, most importantly, consumer protection and financial inclusion. His calibrated supervisory approach focuses on proportional oversight aligned with institutional risk profiles. In crisis management, he advocates learning from failures and enforcing corrective actions and wants stronger risk management among NBFCs. He cautions against excessive growth and unsecured lending. On the microfinance front, he supports inclusion but warns over indebtedness. His career, ladies and gentlemen, in short, is an epitome or a masterclass in depth, reflection, institutional thinking. Allow me the pleasure of introducing and presenting to you Mr. Swaminathan Janakiraman.
I now request Mr. Swaminathan, Deputy Governor, Reserve Bank of India, to deliver his the 12th G. Ramachandran Memorial Lecture on the subject Learning, Judgment and Public Purpose, Lessons from Banking.
Good morning, everyone. Vanakkam, Namaskaram. Dr. Rangarajan, Chairman, Madras School of Economics. Dr. Bhanumurthy, Director, Madras School of Economics. Sri V.N. Shivshankar, Senior Vice President, Siki. Members of late G. Ramachandran's family. The distinguished guests from the industry, academia, and the banks. My ex-boss, Mr. Pradeep Kumar, esteemed faculty members, staff, and dear students, ladies and gentlemen, very good morning to all of you. It's an honor, it's a privilege to deliver Sri G. Ramachandran Memorial Lecture. I use the word privilege consciously because this occasion brings together three enduring values, as Mr. Shivshankar also alluded to. three enduring values: the memory of a distinguished public servant, the intellectual setting of this Madras School of Economics, and the long institutional legacy of the Southern India Chamber of Commerce and Industry. Sri Ramchandran belonged to the generation that helped shape India's economic and financial institutions in the early decades after independence. A first-class first in economics from Madras University and a topper in All India examination for the civil services. He served with distinction in Tamil Nadu, became its youngest finance secretary, was later handpicked for the Prime Minister's Secretariat and eventually rose to become the Finance Secretary to the Government of India. He was closely associated with major economic policy measures including bank nationalization and poverty alleviation, and later retired as Executive Director of the Asian Development Bank. His career is a reminder that economics and public policy ultimately derive their meaning from their impact on people, institutions, and the broader economy. I must also acknowledge with deep respect and admiration the presence of Dr. C. Rangarajan. His contributions to Indian economic thinking, monetary policy, financial sector reform, and institution building occupy a distinguished place in the annals of our economic history. His long stewardship of the Reserve Bank, marked by scholarship, judgment, and institutional commitment, has become part of our professional folklore. It is truly humbling to be speaking in his presence today, and we are grateful for the distinction he lends to this occasion. Thank you, sir. I speak today in the presence of eminent economists, the members of family of Sri Ramchandran, and also the students of economics. I do so not as a professional economist, but as a career banker and a banking supervisor. So my perspective is therefore that of a practitioner. I have great respect for economic theory. I have even greater respect for what happens when theory meets reality. The subject on which I wish to speak today is on learning, judgment, and supervision, lessons from my own banking career. So my core theme is that banking cannot be understood only through numbers, models, or regulations, though all three are important. It must also be understood through experience, institutional behavior, and the public purpose that finance is meant to serve. In that sense, a life in banking has offered me three educations: the education of the classroom, the education of the banking counter, and the education of supervision. Each offers a different lens, and together they have helped me understand banking more comprehensively. It is this experience that I would like to share, especially with the students gathered here today. So let me begin with the classroom. Economics first came to me through examination papers, like many of you would have encountered, through examination papers in school and college. The themes were in many ways evergreen: demand and supply, money and banking, public finance, international trade, national income, and business cycles. These are the most familiar themes all of us handle. Like many students, I understood them well enough to write and clear examinations, but I do not think at that stage I fully appreciated how deeply they would later shape my understanding of banking and finance. It was only when I entered banking that many of these ideas acquired life. Demand and supply were no longer only curves in a textbook. They could be seen in the appetite for credit, in the pricing of funds, and in the behavior of our borrowers. Money and banking, which had once been a paper in the curriculum, became the world in which I worked every day. That is why I say, with the benefit of hindsight, that a good education in economics is a powerful thing. It teaches you to ask questions that are simple in form but deep in consequence. What are the incentives? Who bears the cost? Who receives the benefit? What happens if a rule changes? What are the unintended consequences and these options as compared to what? So take banking. A bank is not merely a building, not a balance sheet, not an app on your phone, as several of the current generation would believe that the bank is an app. It is an app, but then it is not just that. A bank is, as I see it, a bank is a bundle of promises. It promises depositors that their money will be safe and available when needed. It promises borrowers that the credit will be available on fair terms. It promises shareholders that capital will be safe. It promises the regulator that it will conduct itself prudently. Finally, in a country like India, banks also carry a broader developmental expectation to support inclusive economic growth. So economics helps us understand these promises better. It gives us concepts such as moral hazard, adverse selection, information asymmetry, and systemic risk. These are not merely academic expressions. They are everyday realities in banking. Moral hazard appears when an institution takes excessive risk because it believes someone else will bear the consequences. Adverse selection occurs when a lender, unable to fully distinguish between a good and bad risk, ends up attracting weaker asset quality. Information asymmetry creeps in when the bank does not get to know the true financial position of the borrower. Systemic risk can arise when the failure of one institution damages public confidence in many others. The classroom gives us the language to understand these realities. Practice teaches us how they appear in real life. The financial system is not made up of variables alone. It is shaped by people, institutions, incentives, habits, cultures, memories, and fears, and at times greed. That is why the classroom, valuable as it is, must be complemented by experience. So this brings me to the second education, which is the banking counter. For many bankers of my generation, banking began at a branch. Customers at the counter, vouchers of various colors and hues, ledgers, cash books, loan applications in paper files, site visits, and credit proposals that had to be examined not as classroom exercise or not on a computer, but in actual practice. It was also a period when banking was beginning to change. As I was mentioning to Dr. in the morning, the recommendations of Dr. Rangarajan's committee, or rather two of them, helped usher in the early phase of bank computerization. And ALPMs, many of you may not be familiar with that terminology today, the current generation. The ALPMs became one of the visible symbols of that transition. But my subject today is not computerization. We will reserve that for another day. It's about something more basic and perhaps more enduring. The first lesson one learns in banking is that it is not only about money, accounting, or procedures. It's about judgment. Credit is a judgment about the future, for example. Will this borrower repay? Will this business generate the cash flows it has projected? Is the collateral worth what it is claimed to be? Is the promoter being realistic, optimistic, or over-expansive? These questions cannot be answered with certainty as the risks appear from the way the borrower presents his accounts, in the assumptions behind a project, in the enthusiasm of a relationship manager. They require analysis, but also a gut feel for people, market, and institutions. After seeing enough loan proposals, borrower meetings, and credit committee discussions, one notices the signals. A business that is profitable on paper but constantly short of cash, a borrower who explains everyday delay as temporary, a credit proposal that relies more on collateral than on cash flows, a loan book that grows faster than the bank can monitor, each tells you something. None of these signals is proof by itself, but each is a prompt to pause, ask better questions, and look deeper. The counter teaches you the difference between the presentation and reality. The audited balance sheet and information memorandums are useful, but they are not the business. The business is in the factory, on the shop floor, in the market, in the supply chain, in the quality of management, and the decisions taken every day. The banker's job is therefore not to be cynical, but to be curious. This is where one begins to appreciate the art as much as the science of economics and banking. Numbers, ratios, and models are essential. They impose discipline, allow comparison, and protect us from relying only on instinct. But they do not interpret themselves. Unlike an exact science, banking deals with people, firms, institutions, and uncertainty. A current ratio may tell us something about liquidity, but not everything about the borrower's ability to manage a stress. A debt-equity ratio may tell us something about leverage, but not everything about the quality of management. A repayment track record may tell us something about the past conduct, but not always enough about the future resilience of the entity. This is an important lesson for students of economics. Institutions and firms cannot be understood only through reported numbers. Numbers tell a story, but one must learn to ask what lies behind them. Whether profits are supported by cash flows, whether growth is supported by capability, whether risk is understood or hiding in plain sight, on whether governance is a living practice or only a formal structure. The counter also teaches us the human dimensions of finance. Behind every loan account is not only a borrower but a story. Sometimes it's a story of genuine business difficulty, a sound enterprise affected by a shock beyond its control. Sometimes it is a story of poor judgment, expansion undertaken too quickly or a debt taken too easily, or risks underestimated during good times. Sometimes, of course, it's a story of deliberate misconduct. A banker must learn to distinguish between these situations, not because the discipline of repayment is less important, but a banker must learn to distinguish because understanding the cause will help one respond better. The education of the counter is invaluable. It gives the banker experience, instinct, and feel for the risk. But a banker usually looks at risk from a perspective of their own institution. The supervisor must view the same institution from a systems perspective. That shift in perspective brings us to the third education that I want to speak today, the education of supervision and public purpose. When one moves to supervision, the viewpoint changes. A banker is naturally concerned with growth, profitability, customer relationship, and competitive position. A supervisor is concerned with safety, soundness, governance, and the larger public interest. This does not mean that the supervisor is indifferent to the difficulties of running a bank. On the contrary, a good supervision requires an appreciation of those difficulties. Banking involves uncertainty. It involves taking risks, managing relationships, making decisions with evolving information, and responding to competition. But the supervisor's responsibility is different. The supervisor must ask not only whether the bank is successful, but whether it is safe and sound. This distinction is important. A bank may appear successful for a period because it is growing rapidly, gaining market share, and reporting healthy profits. The supervisor's task is to look beneath the surface and form an independent view of the institution. Indeed, the supervisor's job is not always an easy role to explain. Supervision imposes requirements on banks. It asks for information, reviews systems, questions the practices, and sometimes requires changes that may appear burdensome. The costs of supervision are often visible. They appear in size of compliance teams, reports, audits, technology systems, and management time. The benefits, however, are much harder to measure. How does one measure a crisis that did not happen? How does one calculate the value of a bank run that was avoided? A depositor who is protected, a fraud that was prevented, or a control gap that was corrected before it became a systemic problem. It is very difficult to put a benefit in terms of money. This is the paradox of a good supervision. When it works well, it is often noticed less, not more. Its purpose is not to make headlines. Its purpose is to preserve confidence quietly so that households can place their savings in banks, businesses can access credit, and the financial system can support the real economy without becoming a source of instability. That's why supervision must look beyond formal compliance. The compliance asks whether the rule has been followed. Supervision asks whether the underlying risk has been understood and addressed. A bank may have the required committees, policies, and reports, but the real question is whether these mechanisms are effective. Are risks being recognized in time? Are loans being monitored properly? Are governance structures asking difficult questions? Is growth supported by sound underwriting? These questions matter not because supervisors enjoy asking them, but because unchecked weakness in one institution can impose costs on many others. Seen in this light, banking supervision is not an obstacle but part of the foundation that allows banking to command public trust. A lightly supervised system may appear efficient for some time because the costs are lower and the growth may be faster. But if their growth rests on weak governance, poor credit standards, or hidden risks, the eventual cost is borne not only by shareholders or management, but by depositors, borrowers, taxpayers, and the wider economy. The true value of supervision, therefore, lies in reducing the probability and severity of such outcomes. For students of economics, this is also an important lesson in public policy. Some public goods are difficult to price because their greatest value lies in prevention. Financial stability is one such public good. It is taken for granted when present, but its absence is deeply disruptive. Banking supervision is one of the institutional mechanisms through which that public good is protected. So let me now bring these strands together, the three strands that I put out: the classroom, the counter, and the supervisory perspective. May appear to belong to different worlds, but in practice they are deeply connected. The classroom helps us think clearly. The counter allows us to observe carefully. The supervision enables us to look beyond the immediate institution to the wider system. For the students in this room, I would offer three simple reflections very quickly. First, take your formal education seriously. Concepts matter, frameworks matter. The ability to think in terms of incentives, trade-offs, and unintended consequences will serve you well any field you enter. Second, do not remain confined to concepts alone. Seek exposure to institutions as they actually function. Understand how decisions are made, how risks are taken, how reward structures operate inside organizations, and how policy is translated into practice. Third, remember that finance has consequences beyond the balance sheet. Credit decisions affect businesses, livelihoods, and growth. Weak governance in a financial institution can affect many who had no role in creating that weakness. Sound finance is therefore not only a matter of profitability, but also of responsibility. The world that you will enter is very different from the one in which the earlier generation of bankers and administrators worked. Banking is becoming more digital, more data-driven, and more interconnected. Credit can now be originated through platforms. Payments move instantly. Algorithms may influence lending decisions. Non-bank entities play a growing role in financial intermediation. These changes bring enormous possibilities. They can widen access, reduce cost, and improve efficiency. But they also bring new questions. Is the customer being treated fairly? Is the model understandable? Is the accountability clear? Are risks being recognized early enough? These questions cannot be answered by technology alone. They require judgment, they require institutional discipline. They require humility about what we do not know. And above all, they require a sense of public purpose. That, to my mind, is also the enduring relevance of Sri G. Ramachandran's life and work. He belonged to a generation that was called upon to build institutions, not merely manage them. He worked at a time when economic policy was inseparable from the task of nation building. The instruments available then were different, the challenges were different, and the financial system was far less complex than it is today. But the essential question remains the same. How do we ensure that finance serves the needs of the economy and the public at large? Each generation must answer that question in its own way. Sri Ramachandran's generation answered it through institution building, public administration, and major policy changes. The present generation must answer it through sound regulation, responsible innovation, better governance, and a financial system that supports growth without becoming a source of instability. Your generation, the students, your generation will have to answer it in ways we may not yet fully anticipate or understand. The financial system of the future will need technical skill, but it will need something more. It will need people who can combine knowledge with judgment and ambition with public purpose. In this context, an apt saying of Thiruvalluvar about being in Chennai, we cannot afford not to quote him, about application of knowledge. Very old, very familiar. I'm not going to say something which you are not familiar. The audience, I'm sure, must be very, very familiar. That comes to my mind. I'm going to quote that. Is karka kasadara karpavai katrabin nirka adarakattaha. So for those of you who do not understand Tamil, it essentially means learn thoroughly what should be learnt, and let his conduct be worthy of the learning. It is in that spirit that we remember Sri Ramachandran today. His career reminds us that public service is measured not only by education one acquires, position one holds, but also by the institution one helps strengthen and the larger purpose one serves. I'm grateful. In conclusion, I'm grateful to Madras School of Economics, to the Southern India Chamber of Commerce and Industry, and to the family of Sri G. Ramachandran for this honor of delivering this memorial lecture. Thank you. Godspeed. Jai Hind.
Before we get down to listening to the much awaited presidential address of Dr. Rangarajan, sir, I wish to thank Mr. Swaminathan, Deputy Governor, Reserve Bank of India, for what I truly believe was an absolutely cerebral speech. Sir, my father taught me many things, but he didn't teach me the Tirukkural. Maybe I would have been a better man if I had, that had been drilled into my mind. Be that as it may, so it was truly a very insightful, thought-provoking address, and I could see the awe in the face of the young minds and a wake-up call to the students of the present. Thank you so much, sir. Let me set the context of why and how we began this memorial lecture. A year after about a few months after my father passed away, his only friend in his closing days and my mentor, Dr. Rao, original builder of the telecom business in the country, he said, I'm not going to allow his legacy to go down for nothing. And then my uncle, who has been a constant supporter both within and without the family of mine, Mr. Natarajan, Vice Chairman of the Sri Ram Group, they have been a constant supporter of this endowment lecture. Thank you very much, sir. Of course, Subhashri is here, a friend, a colleague in the group, and of course, one of my best friends' sister as well. And every time we needed both stalwart speakers and material support, your ex-boss, as you called, the present chairman of the Karnataka Bank, it is in that capacity that the bus was donated yesterday. He kept mentioning it. It is not a gift from Pradeep Kumar. It is the Karnataka Bank that is opening its heart to. So I thank many. There's that list is long, so I'm not going into it. But my brother who lives in Palo Alto, California, it was he who said, why don't Appa's dream was always about Indian economy. And there's only one place in Chennai which should actually host that lecture. And who better than Dr. Rangarajan? My father had the privilege and honor of serving with him on the board of Reserve Bank of India following his retirement. His statement was always, I will not serve on the board of any companies after retirement. And I think he had the vision to see what could happen. So he stayed away from companies. And the only time that he agreed to serve on a board was when Dr. Manmohan Singh and Dr. Rangarajan invited him to serve on the Reserve Bank of India board. And I must thank Dr. Rangarajan, who allowed my brother's dream to establish an endowment in the Madras School of Economics. Delhi School of Economics was what my sister would have liked. She's an alumnus from there. But then geographical limitations and advancing age of senior members of the family ensured that each of us could attend year on year the lecture here. So part of the endowment involves recognizing the top students of this school with awards. 2 medals are given away every year, and although they are into their internships and professional careers, the 2 students have willingly agreed to come from wherever they are. One, I understand, is flown down from Mumbai, the other from Noida, perhaps. And I would request, sir, Bhavani, can you get the medallions? Yeah, I would request Mr. Swaminathan to step forward and hand over the medals. I request my brother-in-law, Mr. Gangadharan, and as also Dr. Rangarajan. The first medal is to Jaknavi. He's the topper of MA Research and Business Analytics. The second medal goes to Jai Shivam. He's the topper of the finance group, batch of 23-25. Thank you very much, sir, for doing the honors for these young minds. I think this is a moment for the rest of their lives, for sure. Dr. Rangarajan needs no introduction, a legendary banker of India who shaped modern India's economic policy. His presidential address have kind of been a primer in the present state of the global economy to all of us every year. And every year we see the global economy changes, more so now than ever before. The legendary Dr. Rangarajan.
Yeah, Mr. Swaminathan, Mrs. Swaminathan, Mr. Ganapati, Mr. Shivshankar, distinguished invitees, members of the Ramachandran family, faculty, students, and staff. I'm indeed very happy to be with you all this morning on the occasion of the 12th G. Ramachandran Memorial Lecture. Mr. Ramachandran was an outstanding administrator. He had a brilliant academic record, followed by topping the IAS exam. I was also a student of Loyola College, but I didn't get to know him because he was several years ahead of me. But he was a role model for all students at that time. As a distinguished administrator, he had the opportunity to hold key positions both at the state level and at the center. This gave him an opportunity to give shape to critical economic policies that India needed in those days. What is the role of an administrator? A good administrator is one who places before the political leadership, which has to take the decision, the pros and cons of every problem that comes before it, and lay out the alternatives before the political leadership. It is often said by some that the members of the Indian Administrative Service are all cautious. But it is also said not only about IAS people, but the entire government servants, that they are all trained to do what? As they say, to do things rightly rather than do right things. That is a real problem. A good administrator must be a thinking administrator. An administrator who can, as I said earlier, look at alternatives and make the right suggestion. I think it was fortunate that we had distinguished administrators like G. Ramachandran. And I would also say that I had no opportunity to know him that well. But, as was mentioned by Ganapati, when I was governor of the Reserve Bank, he was nominated as member on the board of directors. And he came to the board meetings always fully read and with all alternatives and insights on the problems that were coming up before the board. Therefore, the members of the board looked forward to what his comments were going to be, and that is an important contribution that he made post-retirement to the development of the country. G. Ramachandran completes 99 years with this year. The next year is going to be very significant. It will be the centenary a year, and we will discuss with Mr. Ganapathy and his family members as to how to what to do with it. I'm also extremely happy that Mr. Swaminathan accepted an invitation to deliver the memorial lecture today. I have also not known him that well, but I read his lectures, which are printed in the RBI bulletin. I must tell you, these lectures usually are not that lengthy, but they are crisp, and I would say the simplicity of the style is very attractive. I recently read two articles, or two lectures. One was at Jammu and Kashmir, and the other one was some other Institute of Management. And I think it is extremely important that administrators need to convey their ideas, and the ideas in a way in which it is comprehensible. Once again, I thank you very much, Mr. Swaminathan, for a very delightful lecture this morning. But even though I must say, when I first saw the title of the lecture, it talked about learning, judgment, and public purpose lessons from banking, I was a bit intrigued. I think, what is all this? Now, in fact, I thought learning, judgment, and public purpose, lessons from, instead of banking, you can put anything, because these are the things to be learned, and these can be learned not only from banking, but every other economic activity. But he has been in banking all through his life, and all through his professional life. Banking is his career. From commercial banking, he got transformed into central banker, and that has done good to the country. I must also thank him for all the responsibilities that he has held in looking after the financial system of the country. He talked a lot about supervision. I may have to say a few words on that, but the point is, supervision is important. And the way it is done is extremely, it is critical. So I feel his transformation into the central banker is good for the country. And, the word banking has a Latin root. It is derived from the word bancus, which means bench. Because it is a bench on which the Latins, the Romans, did the money lending business. So it is from that money lending business, which was done on the bench, the bancus, that the word banking has come. Now, as Mr. Swaminathan mentioned, banking has got completely transformed. It is no longer doing business sitting on the bench. I mean, I think that went away even a long time ago. But from that, from the transition, he mentioned the word advanced ledger posting machines, ALPMs, which were introduced in the late 1980s. There is a story behind it. Why advanced ledger posting machines? When my first report on computerization was to be released, you will see on the title, the word computerization is not used. Mechanization of banking is what the term that is used. And there was so much opposition to the introduction of computers that we couldn't use the word computers also. So this curious word, advanced ledger posting machines, I mean, it can be anything, but that was coined in order to soothe the concerns of, I would say the wrong concerns of the people. But I was telling Mr. Swaminathan this morning also that at that time, when I went to the State Bank of India for a meeting, not the clerical staff, but all the officers of the State Bank of India allowed me to go in. Before I could enter the lift, they surrounded me and tore my coat. That was the opposition that was there for the introduction of computers. And then look at the distance that we have traveled now. Today everybody talks about digitalization. And look at, I think the transformation that has occurred in the payment system is simply marvelous. I think it is really that which has really, it has quickened many things in banking. So in some sense, things are changing. Sometimes the changes are very fast. He was talking about a theory. Theory is important because without theory, you cannot really understand the problems in the proper context. But theory by itself does not completely solve the problem. He talked about experience and the need for how theory must be applied in that context. There is a sentence from Keynes. There is a set of books called the Cambridge Handbook series. The Cambridge Handbook series, it's on money, it's on something, supply and demand, and so on and so forth. The Cambridge Handbook series. There's a common foreword written by Keynes to all of them. And in that he says, talking about economic theory, he says, it is a method rather than a doctrine. An apparatus of mind, a technique of thinking which enables his drawer or possessor to draw correct conclusions. So that is what the purpose of theory is. The purpose of theory, in the final analysis, must be to enable life, the problems that you face are to be solved. So it is a mix of experience and theory, which ultimately is what is needed. Those who sometimes shun theory and those who sometimes talk even of, oh, these are theorists, I think are making a big mistake. As Keynes once again said, those who say that they are not believers of theory are very often the believers of a theory which is defunct. So that is a kind of thing that happens. So I believe that we have to learn from experience, and we have to mesh theory with experience. When you talk about lessons from banking or lessons from any other economic activity, we essentially think that there are lessons to be learned. It is often said about history. Is history useful? And there is a famous observation that you all know, that those who do not know history are condemned to repeat it. That's true, if that is true. But then, philosopher Santayana has said that those who know history are also condemned to repeat it. What does it mean then? Where do we stand? Now, it all depends upon what kind of lessons that you draw from experience or from history. So therefore the just experience by itself does not really give you all the answers. You must draw the appropriate lessons from history. There are many things that Mr. Swaminathan mentioned this morning. I'm not going into it, but the point really is how much of, let us say, regulation is desirable. The whole question that very often people ask whenever it comes to regulation is really this issue, namely that we need innovation, we need changes, we need new answers to the new problems. Therefore, it is critically important that we do that. But then, are innovations risk-free? You can ask the same question about digitization, or you can ask the same question about AI, Gen AI, or so on and so forth. Therefore, there is always a problem. But if there is too much of regulation, what happens? If there is too much of regulation, then it also can affect innovation. Therefore, the big question before the regulators at the top level is to really to find out a balance between letting innovations happen and at the same time limit regulation. In fact, there are people who have estimated the cost of regulation also. Not the cost of regulation to the regulator, but the cost of regulation to the companies. Because, for example, we can ask any amount of information from the companies or banks which are being regulated. But is that all needed? Is information going to be that free? It is not. I mean, every time you ask, somebody had actually in government tried to find out how much cost does it have to the government, have to be borne by the government to answer one question in the parliament. You remember that if there is a question in the parliament, it will be sent to X number of people. I mean, I think the answer will come from so many people. And then everybody will then start asking their subordinates to give the answer. So the point really is that it is not that we should not regulate, or it is not that we should ask for information. But there is also this question that arises, namely the extent of regulation and the cost of regulation. I'm not saying that regulation is unnecessary or anything like that. I mean, far from it. I mean, I think I have been also be a regulator at one time. And the point really is that we just as problems arise and new issues arise and new challenges come, and we need to find an answer. And we are also to find out what form and what shape regulation should take as new challenges come. I think very, very clearly there is a new area opening up with the high degree of digitization that is happening, and so many AI is being applied to various channels. Then I think the regulator has a new problem facing before him. The new problem is exactly what to do in order to prevent frauds or prevent misuse because of the new techniques. So in some sense that there is an issue with respect to regulation also, and which we need to bear in mind. It was mentioned by Mr. Sakthivel and namely that what is happening to the world now, and
what kind of challenges that we now have. Look at the change in the scenario. One country bombs another country without declaring war or without the what they call boot on the soil. So there is no boot on the soil in the sense that there is no army going into it and so on. And look at it in terms of international trade. Hormuz is not the same thing as Suez Canal. Suez Canal was artificially constructed, and therefore levying a toll on it is legitimate. But the maritime law recognizes that all the other seaways are open and free, and nobody can levy a toll. So the whole basis of international trade is that each country produces that commodity for which it has a comparative advantage. Now, if that really happens, welfare is maximized, because throughout the world, the commodity is being produced by that country which has the minimum, at which the minimum cost is happening. So the whole idea of that, and it also means that goods can freely move from one country to country. That is the basis of international trade theory. All the theory of comparative costs that we teach to the students and also practice is gone. So I'm, and also the other thing, a big question has arisen. The question really is that should every country produce every commodity? No, that is exactly the opposite of the other proposition, because why? We moved in 1991 from a system in which we were trying to produce everything independent of cost considerations. Because the producing it within the country is all right. But if we can do it at a cost which is not too much different from the world cost, then fine. Therefore, the import substitution, as we call, import substitution without cost considerations is dangerous. That is why we moved to a new system in 1991. Now it looks like that every country should produce commodity which is critical for it. The Russia-Ukraine war talked about chips. Now this new thing, what is happening, but naturally we cannot produce oil. I mean, I think it's nature's gift. So it's not going to be that easy to how to manage, diversify, find out alternatives to fossil energy, and so on. So the whole issues are getting changed. So I would say that in the banking and the financial system, as he pointed out towards the end, Swaminathan pointed out towards the end, are also changing, and we have to do it. It is I think somebody said that central banking is neither a science nor an art, but a craft. I think it is half-truth. Central banking is no longer applying well-known remedies to well-known problems. The problems are new, the problems are not clear, and the remedies are also not that clear, and remedies have also to be found out. Therefore, central banking, like every other field of activity, must also be innovative. And I'm happy that people like Mr. Swaminathan or in the Reserve Bank of India to lead the innovative changes that are required in the various areas relating to the financial system. Once again, I want to thank Ganapati and the members of the Ramachandran family for instituting this lecture. And I must also say that this afternoon Mr. Ganapathy is receiving an award as a distinguished student of IIT. Let me, on behalf of all of you, convey our congratulations to him. Once again, I thank Mr. Swaminathan for a very useful, inciting, lecture, which should make us all think. Thank you.
I've received thanks from many, sir, but congratulations from many, but wishes from you are very special. Thank you so much, sir. Thanksgiving time, and may I, on behalf of all of you, ahead of Dr. Banamurthy proposing the formal vote of thanks, thank Dr. Rangarajan for a truly inspiring, knowledgeable, laced with humor, filled with content, and opening our minds more than ever on the present state of the economy. Thank you so much, Uncle. May I now request the senior-most member of our family, Dr. C.N. Gangadharan, to present a memento to Mr. Swaminathan. About to be President of Southern India Chamber and Senior Vice President Shiv Shankar will recognize and thank Dr. Rangarajan. From the senior-most member of the family to the first grandchild of the family, Madhura Ganesh will recognize Dr. Banamurthy. But I must, from the family standpoint, thank one man who has made this possible year after year, year after year, and never participates, the man behind the scene, Vinod Solomon. Vinod, thank you so much from all of us. Without you, this would never have been possible. Thank you so much, Vinod. Before the national anthem, lunch is served in one of the classrooms adjacent. Request you to join us for that. And now for Dr. Banamurthy.
Dr. C. Rangarajan, Sri Swaminathan, Dr. Ganapathy, and other members of Sri Ramchandran family, and invited guests, media, as well as my faculty members and students. This is, at the outset, let me thank our chairman, Dr. C. Rangarajan, former Governor of Reserve Bank of India, for not only presiding over this lecture, but also guiding us in every stage of this event. I'm sure all of you will agree with me that every time he speaks, he comes with something very new. You know, that is one thing which I always admire and enjoy listening to him all the time. Thank you so much, sir, for your talk. We would like to thank Sri Swaminathan, Deputy Governor, Reserve Bank of India, for taking time out of his busy schedule and to be with us to give this 12th G. Ramchandran Endowment Lecture. In this dynamic world, the job of a regulator is extremely challenging. We keep checking rupee-dollar exchange rate on a regular basis and sometimes with a concern. In fact, every day morning when I meet Dr. Rangarajan at 10 o'clock, his TV is on and we talk about exchange rate. So once you are a banker, once you are a central banker, you are banker for the life. So that is how we keep track exchange rate very, very carefully. Today I saw it has crossed 95. So it is a flash news. So I know there's so much of concern. But then we comfort ourselves and also thank God that we have Reserve Bank of India. And I'm sure all of us agree with that the whole financial sector is in safe hands, and people like Sri Swaminathan gives a lot of confidence to all of us. Sir, on behalf of the Madras School of Economics and family of Sri Ramchandran, we thank you so much for giving this 12th endowment lecture. We know it was a long pending visit. Actually, whenever I meet him, I keep asking, when are you coming to Madras School of Economics? So I'm glad that it has materialized now. And thanks to Mrs. Meera Swaminathan also for gracing this occasion. A major part of this event is organized by the family members of Sri Ramchandran. We would like to thank Sri Ganapati, son of Sri Ramchandran. As Dr. Rangarajan mentioned, today is a very busy person, today particularly. So he'll be running from here to IIT Madras to receive the Distinguished Alumni Award. And once again, congratulations for your contributions. We also like to thank all the members of the family who are here today. Thanks to all the Siki members, especially Sri Shivashankar and his team for making this event a very successful one. We would like to thank senior management from various banks in Chennai, RBI Regional Office, RBI Staff College, and all the invited participants who are attending this event. We also like to thank our faculty members, students, staff of MSc, and the 2 students who received award. Thank you so much for coming back to campus and receiving the gold medals. Last but not least, thanks to the representatives from the media for covering this event. Thank you.
Before we rise for the national anthem, we have received through the Chamber Secretariat requests from several people for taking photographs with Dr. Rangarajan and Dr. Swaminathan. I've requested them to stay back before lunch for about 5-10 minutes and carry it out, but we go into the order of request. The first came from State Bank. We'll give them the permission. Then, of course, I must also, on behalf of the family, thank the largest sponsor year on year, and hopefully in the coming years too, Sri Ram Group, Subhashri and Mr. Natarajan Uncle are here. I thank both of you for that. Then, of course, Mr. Deepak Shraddha, my very good friend, sir. He is the technology man of Indian Bank. And I'm sure he must have listened to Dr. Rangarajan with all when he was talking about computerizing the bank. Then, of course, Karnataka Bank, Chairman is here. Thank you so much. And, of course, Indian Bank, as I mentioned, State Bank, and Karnataka Bank, and, of course, the Sri Ram Group. Thank you all for making it possible year on year. And now we rise for the national anthem, which, as always, we'll sing in chorus. Thank you.
पंजाब सिंध गुजरात मराठा द्राविड़ उत्कल बंगा चल यमुना गंगा उच्चल जलधितरंगा तव शुभ नामे जागे तव शुभ आशीष मागे गाहे तव जय गाथा जन गण मंगलदायक जय हे भारत भाग्य विधाता जय हे जय हे जय हे